I'm excited about our next guest, Robert Rolih. He's a best-selling international author of The Million Dollar Decision. Robert, welcome to the show today.
Hello, it's a great honor to be here.
Now, Robert, I know you a little bit about you, but our audience doesn't. So tell us your backstory.
Well, I started my career as an entrepreneur, and then I lost a lot of money because I trusted the wrong people, financial advisors, asset managers, and that wrecked me financially. And that is why I decided to learn all about investing on my own and to take control of my personal finance and investing. So yeah, it was a big change for me because at first I only learned how to make money as an entrepreneur, but later I also learned what is happening behind the scenes of the financial industry, and I learned how to invest very profitably on my own.
Now, you've been educating investors for years. What do you think is the biggest mistakes that people make when it comes to investing and building wealth?
Yeah, we all make mistakes when it comes to investing. I made plenty of them early in my journey. One of the most costly mistakes I made in the past, and the one I see a lot of people still making, is making investing way more complicated than it needs to be. People think they need to be in 20 different investment products, follow the latest hot trends, or juggle advice from 10 different experts. It's like trying to bake a cake using 5 different recipes at once. You'll just end up with a mess, not a masterpiece. So the truth is, investing is simple. It's the financial industry that works hard to make it look complex, because complexity justifies high fees. Then maybe another one is chasing the shiny object. People jump into the next big thing because some guy on YouTube promised 10x returns. They trade in and out of markets, trying to make quick gains, and then they wonder why their portfolios look like a stinking shit. So in the end, building wealth isn't about being a genius or following the latest hype. It's about keeping things simple, and having a long-term view. The more you chase complexity or quick wins, the more likely you are to lose the investing game.
I'm a big believer in simplicity as well. Keeping it simple is the best way to go. Now, you're an international bestseller. Your book was The Million Dollar Decision. So what exactly is The Million Dollar Decision?
Yeah, the $1 million decision is quite simple. Lower the fees you are paying when you invest, especially management fees. These are the fees you pay year after year without even noticing. Now, why is that so important? Most people don't realize it, but management fees are a devil in disguise. They look small, and mostly harmless, just maybe 1 or 2% a year, right? But over time, they quietly compound and eat up a huge chunk of your investment returns. Or they can even cut your retirement savings in half. I call this in my book the dark side of compounding. So let me give you a quick example. Last year, my youngest child's teacher asked me to speak to his class. I gave a short talk about money to a lively group of 10-year-olds, and I gave each student a copy of my book. And also the teacher took one. Now, a few months later, the teacher emailed me. He told me that after reading the book, he began to question his investments. And, these investments were managed by his financial advisor. Now, after checking his accounts in detail, he was basically shocked. He realized that after years of investing, he was barely breaking even. Meanwhile, the stock market has gone up over 40% in the same time period. Now, I won't reveal his portfolio, of course, but let's say that he had $100,000 invested. Missing out on a 40% gain means $40,000 lost. Not because of the market crash, but mostly because of high fees and also a poor choice of investment products. Now, extend this over 10 or 20 years, and you are looking at a retirement disaster. And that is why you need to minimize fees when investing. And that is the $1 million decision. Lower your fees and your returns will skyrocket. It's that straightforward. Now, for that teacher, it may have just saved him an extra decade or two of hard work and a whole lot of financial headaches.
Now, Robert, you made an investing mistake. How did that impact you and how you're helping to train other people?
Yeah, I was a successful entrepreneur, and I thought, I don't need to learn anything about investing. I will just hire the best people to handle it. So I handed my money to several financial advisors and money managers. Big mistake. Now, years later, I opened my account statements, and it was like, are there some zeros missing? Most of the money was gone. I didn't gamble it away. I followed professional advice. And that painful moment forced me to wake up and take responsibility and learn what is happening behind the scenes of the financial industry. Now, the lesson: no one will ever care about your money more than you do. The person who controls the money is the one who wins in the end.
Now, you've talked a lot about financial myths. What's one financial myth you wish people would forget about?
Yeah, good question. Maybe the idea that you need to be a financial expert to invest successfully, and that you need to constantly watch the charts and follow the news to do it right. Total myth. You don't need a finance degree. You don't need the Bloomberg terminal or 5 monitors flashing stock charts in your living room. What you need is a long-term mindset. Maybe a simple system, a bit of discipline, and the ability to ignore the noise, because there is a lot of noise around us. Now, in investing, less noise usually means better returns. It's a lot of like driving a car. You don't need to read the traffic report every 10 seconds or check the oil every hour. You just need to keep your hands on the wheel and stay on course. And that's it.
Well, speaking of noise, I mean, there's tariffs, there's political division, there's wars going on. How can people stay calm through all of the chaos that's going on?
Well, I think that you simply need to zoom out. You need to take a long-term view and zoom out. There's always something scary going on, wars, inflation, elections, recession, viruses, you name it. The scary headlines will never stop. But when you take a step back and look at the bigger picture, the market has one general direction, and that is up, with a lot of bumps and drama along the way, of course. And of course, there are always the famous doomsayers, the ones who have predicted 15 out of the last 2 recessions. They are constantly warning us that the biggest stock market crash is just around the corner, and that everything is going down and so on, So my advice: stop listening to them. Pessimists always sound very smart, like they maybe know something that you don't, But in the real world, it's us, the optimists, who make money. So instead of freezing when the market drops, do the opposite. Invest regularly, even, maybe increase your investments when everyone else is panicking. And that's how you outperform most investors.
Yeah, I think a good analogy, it's like a stair steps. It doesn't go straight up, but over time it goes up.
Yeah.
Now, you talk a lot about not following the crowd. In fact, you say do the opposite of what the crowd is doing. How's that strategy been working for you?
Yeah, it has been working for me amazingly good, because the crowd is usually wrong, especially when emotions are very high. When everyone is selling is in panic, that's usually the best time to buy. Now, this of course sounds very simple, but it's really hard to do, because it means going against your emotions. Let me give you an example. In 2022, Bitcoin dropped 77%, from $66,000 to $16,000 per Bitcoin. At that time, a famous TV host was also yelling, sell your crypto while you can. And do you know what we did? We bought, At that time, we were buying. And now we are sitting on a 500% gain. That was one of my best calls, And I made it when everyone else was in a panic mode. So yeah, going against the crowd works, but only if you are psychologically strong enough to pull the trigger. Like maybe the American sniper.
Yeah, Warren Buffett says, be greedy when others are fearful and be fearful when others are greedy. And I think that's exactly what you're talking about. Now, you've got some strong opinions on the stock market, on gold, on crypto. Like, where's your portfolio right now with everything that's going on in the world?
Well, I'm not a financial advisor, so I can't tell people what to invest in, but here is what I'm doing. I build my portfolio on a foundation of low-cost stock ETFs. Okay, that gives me exposure to hundreds of strong, profitable companies. Because when you buy ETFs, you are basically buying a big basket of stocks. Then I add a smaller piece in Bitcoin and a few other major crypto infrastructure projects. These are only big cryptos, established cryptos, because they have real potential to grow and real use cases. And finally, I keep a little gold as a safety net. And that's it, 3 pillars: stocks for growth, crypto for the upside, and gold for protection. You don't need 50 different products, You need the right ones and the discipline to hold them for a long time period. And that's it, This is the secret to successful investing.
Now, it's said that this administration is the most crypto-friendly of any so far. Where do you see the future of crypto going?
Well, crypto today feels like the internet around the year 2000. Huge potential, but unfortunately, 99% of what's out there is basically junk. Just like all the unprofitable .com companies back then. Now, the trick is knowing what to ignore. Don't chase meme coins and all sorts of other small crypto tokens because, like I said, 99% of that will go to zero. And definitely don't follow crypto influencers who treat investing like a game of roulette, Focus on a few big and established projects that actually solve real problems. These are the Googles and Amazons of the future crypto space.
Now, if you're looking out over the next 10 years, where would you be investing? Stocks, gold, real estate, bonds, crypto? Kind of tell me what you're seeing for the next 10 years or so.
Yeah, I would do, I would go mostly with stock market ETFs, with the lowest management fees, of course. Now, they're boring, and that's exactly why they work. When you invest in ETFs, you are investing in hundreds of real companies with real products, real profits, and real resilience, These companies survived wars, pandemics, recessions, different presidents, and they will also survive all trade wars and also tariffs. It's not flashy, it's not exciting, but it's proven, And when it comes to your financial future, boring is very beautiful. So I would mostly go with stock ETFs, and then, like I said, I would add some big cryptos, maybe some gold as a protection, and that's it, But mostly stock ETFs.
Well, Robert, if somebody wants to get a hold of you, how can they get a hold of you?
Well, the best place to start is my website. It's robertrolih.com. So Robert Rolih, my name and last name is here. Rolih is my last name. So robertrolih.com. And I recommend joining my free webinar. It's where I teach the key strategies I've used to help thousands of people grow their wealth. And maybe, just maybe, that 90 minutes, could help you save $1 million in the future.
Well, thank you very much for joining us today, Robert, and thank you to everyone for watching another episode of Financial Freedom with Tom Hegna.